Hello and welcome to Tuesday's Commodities Corner. Today I'm joined on the line by Bjørnar Tonhaugen, Senior Commodities Analyst at Nordea Markets in Oslo. Now today we witnessed an increase in crude oil futures after a few days of continuous losses. Now what do you think are the main causes that were sending prices lower recently?
Yes, well, lately there has been a combination of factors driving oil prices slightly lower. I guess it started with disappointing manufacturing surveys from the United States, the so-called ISM manufacturing index, which disappointed on the downside to expectations, and it was largely due to worries about how the impending U.S. fiscal cliff was resolved, and not so much distortions from Hurricane Sandy. So that was a negative surprise for the markets in terms of the manufacturing momentum in the United States. And also we saw disappointing retail sales and industrial production numbers from the Eurozone following that. And then last Wednesday, there was a large build in oil inventories in the United States, much larger than the market expected.
At Wednesday's Organization of Petroleum Exporting Nations meeting in Vienna, many expect the organization to retain its 30 million barrel a day output target for the first 6 months of 2013. Do you agree with this, and what else are you expecting from this meeting?
Yes, I agree that it is largely expected that their current output target is going to be unchanged. But the key point here is that they have not adhered to that target at all since it was introduced last year. So in 2012, year to date, they have produced 1.5 million barrels a day above that ceiling of 30 million barrels per day. So they have succeeded in keeping oil prices in check, because there has been a lot of disruptions to oil production in many areas in the world, including, for instance, Syria, Sudan, and elsewhere.
The output policy looks pretty straightforward. However, a decision on who to appoint Secretary General does not. Who do you think will be the main contenders for this position?
Right now it seems like there are two contenders that seem most likely. That is Saudi Arabia and Iraq, which are now also the two largest producers. So I guess if OPEC chooses to go for Iraq's contender, I think that will be a major acknowledgement to Iraq's growing influence and role in supporting future supply growth. So Iraq is expected to be the single largest supply growth source for the world's oil supplies in the coming decade.
Recent Chinese data showed oil imports rose last month. This shows Chinese oil demand is accelerating. Do you think it will continue to strengthen in 2013?
Yes, I believe that Chinese oil demand growth will stabilize, and we have a forecast of around 350,000 barrels a day of incremental oil demand from China in both 2013 and 2014. So there are definitely many signs that point to that Chinese economic growth and oil demand growth is slowly accelerating. We don't expect the same kind of oil demand growth numbers that we have seen in the prior decade, due to the fact that Chinese growth is coming now at a lower pace. What is also interesting, and which could also add to Chinese demand growth, is if they kickstart filling their strategic petroleum reserves for the next phase, which is filling of around 200 million barrels in the coming few years. And that could also add additional oil demand from China due to filling of strategic reserves. And
do you think the recent development of political uncertainty in Italy is limiting oil gains?
In terms of Italy's share of oil demand, that is not very significant, but I think it may influence oil prices if it comes through a deterioration in market sentiment. If, for instance, risks to Eurozone breakup grows again in the market. But nevertheless, the current backstop that the European Central Bank has provided through its OMT program is something that I think will be there and provide some kind of security to the markets in terms of this breakup fear. So it could, but I don't think it's very likely that the situation in Italy will alone contribute to sending oil prices much lower.
And finally, what is your short and long-term forecast for Brent oil?
We have a forecast of Brent oil in the first quarter of 2013 of $106 per barrel, which we believe may be the low point for 2013 and the low point for now. We see that the economic growth should accelerate when the fiscal cliff issue is resolved early next year, which will then lead to a growth momentum pickup in economic growth and also in oil demand growth. So we have $108 per barrel in 2013 and $111 per barrel in 2014 as an average.
Thank you very much for sharing your expertise with us today, and hopefully I will speak to you again in the near future. Well, that is all for today's Commodities Corner, but make sure you check out the interviews and press reviews from other members of the Dukascopy TV team on the website. Enjoy your evening.